most of them are not even done by people who've been in the markets. But we're going to change everything and create something nobody's ever done before.
Raoul Pal says that the dollar in your bank account is currently worth 8% less, which is a significant amount. It's not a new fact that rising prices and inflation are generally bad for our savings, since these make our money less than their previous value, say, last year. Raoul Pal hammered in the point that because of growing mortgages and food prices, as well as other strange circumstances, we are obliged to bear the discomfort of being told we can't purchase as much. After a while, things will slow down, leading to some job losses and a decline in both pricing and general economic demand. Raoul Pal says the agony of this inflation, which is caused by a variety of factors, is being shared by all of us. Today's video features CEO and co-founder of Real Vision and global macro investor Raoul Pal. He provides an update on the state of the Bitcoin markets and growth prospects for new investors entering the cryptocurrency space. Paul also discusses the shifting global economic landscape, including high inflation and rising interest rates, as well as the reasons why the United States is the most indebted economy in history. Before we continue with the video, a brief request from us. If you find value in these videos, please don't forget to subscribe and hit the notification bell so that you don't miss our valuable crypto content in the future. Keep watching until the very end to hear Raoul explain why he placed such a large wager on Bitcoin and what he thinks about market volatility. And back to the video. Paul alluded to this example, and I quote, "To put things into perspective, the US accounts for around 25% of the global economy, but their debt is equal to 100% of this. Due to its enormous size, the economy has the highest level of global debt in the history of world economics. Everyone here has debts since we borrowed money for our future selves. This includes countries like China, Europe, Japan, and the United States, which is not the only country with significant debts." Leverage operates in the crypto space as follows. Let's say you have some Bitcoin and want to borrow some more, along with your interest payments or some dollars or whatever it is you want to do. Your interest payments are what they are, but if the collateral is lost and the exchange or the D5 protocol declares that it is not sufficient to cover the amount, you will be immediately dissolved. There is no discussion, no crying, no mercy, nothing. It's just boom out, and you accept the loss. According to Raoul Pal's concept, this is a long-term trend, and this portion will continue to do very well for at least another 10 years, if not 2 or 3. Now, Bitcoin will not increase as much in value per cycle as it gains more users and adoption over time, but there will be a lot of other possibilities. So what we should be doing is utilizing this, considering the money you put in as retirement savings, deducting it, and then just adding if there is a bear market. The issue is that during a recession, the majority of us don't do this. But a close friend of Paul told him early on that the person with the most cash is the one who rules. Paul says, if you have income, some cash, and everything is currently selling for top dollar, you are the king thanks to this opportunity. He says, for heaven's sake, don't focus on your loss of wealth from the peak. If you are fortunate enough, like you and I, to have purchased significantly earlier in the cycle, just think, okay, alright, I'm still in, I'm probably still up, rather than, oh my net worth is down 50%. This is the end. Never be negative. You must be in it to win. And you can't be in it to win if you don't have leverage or if you're not participating in the market at all. He says it's that simple. Therefore, if you say to him, well, you know, it's difficult for folks, sure, put less in. Once you have the correct amount of bet and you can sleep at night after winning, you are at that point. Once your winnings have accumulated, you should not view them from peak to trough. He provided this particular example. And I quote, I love wine, and good wine is expensive, but you can get it for a lot less money if you buy it as soon as it is released. This is one of the tactics I've learned with myself in a little different situation. I recently received a delivery of items I purchased 15 years ago. I employ a small mental trick where I mentally deduct the full amount of wine I paid for when I bought it, because I won't see the wine for 15 years, right? So why should I care? It's really helpful to use mental tricks to stop yourself yourself from doing things you shouldn't be doing, like selling low, buying high, or buying a bunch of wine and then not being able to drink it when you actually buy it to drink. Now that I can drink wine that I would never open because I haven't paid for it, I kind of write it off. Although I don't sell wine, if I did, I would immediately sell all of my amazing wines that I would have never even tasted. I published the first step of macro strategy paper regarding the valuation of Bitcoin because I believed it might be worth $1 million. This is the best wager I've ever seen. Assuming I'm 90% stupid and everything is worth $100,000, I continued to hold on, and when it plummeted by 82, I gasped. However, I had already taken the bet because the money I had invested was not leveraged, and I could afford to do so. I therefore decided to set this aside and wait to see what happened, as this is a long-term endeavor. And you don't typically make money so quickly or fall this far, so let's wait and see, I told myself. I kind of forgot about it in 2014, but in 2015, things started to improve again, and by 2017, I had developed mental scars from an 82% decline that should have happened. I then noticed market uncertainty about whether we would fork Bitcoin because there are 2 different chains and the price is now $2,000, meaning I've increased by 10 times. I said I'm a genius. My macro bet sort of worked out. I sold out, and 3 months later it increased to $20,000. But I didn't mind because I made 10 times as much money by departing from my theory. My concept was that this was a 10-year wager, and after taking the money off the table after 5, I would return. Then of course I bought it again in June or May 2020, and it had a terrific run. So I invested more money than I had in my initial wager. I calculated that I had utilized a theoretical figure rather than just holding my original bet. Therefore, I believe that by making the appropriate decisions and purchasing reasonably low and selling reasonably high, the initial wager of $10,000 would have been worth $1.4 million. I estimated that after significantly increasing my position in June, I still underperformed by 5 times. I then looked back and asked, okay, what did I actually do? What would have happened if I had followed my own framework, which instructed me to buy anything only when it was on sale and there was blood on the streets? I then went back and re-examined the bear market bottoms, assuming I was an idiot and couldn't possibly have missed the bottom by 30 points. And I simply invested the same amount in each moment I began. That actually stopped me in my tracks. Because if I had reinvested my gains or doubled down each time or anything like that, that 1.4 million would have become 3. You stay away from price activity because you believe it will increase significantly in the future. The keyword is over time, and we've all stated it, and we know it frequently behaves in this particular manner. Finally, he mentions that if it's an unknown why and when it happens, people tend to forget this. It's funny when Bitcoin and Ethereum crashed last year and fell 50 or 55 from their high. Paul claimed that he, including the rest of the world, were freaking out. But his wife particularly asked him what was happening, and after talking about it for a little while, she said, "Shut up, you shouldn't be freaking out. Instead, you should be buying." And that's why his wager worked out. And that concludes today's video. Please let us know down in the comments below what are your thoughts about Paul's take on Bitcoin volatility and the market structure. Also, leave a like, subscribe, and click the bell button so that you don't miss out on new information on our crypto content related videos. Anyway, see you later, good luck out there, and thank you for watching.